Good morning, everyone. We were talking about Caterpillar last night with our MMTs and some of our worldwide clients. Is that on this weekly chart, Caterpillar, like the rails and like the transports in that area, but when we start getting bellwethers like Caterpillar, FedEx, and some of these major rails guiding down, that is something that this upcoming earnings season is going to have to deal with. And as far as Caterpillar goes, you know, the thing about it is it was down over 1.8% after lowering its 2015 guidance due to slumping demand for mining equipment and sluggish global economic recovery. Now, I will caution people on these commodity trades and these big bull runs that were the greatest sectors, and without growth coming from around the world, these big ones are having problems. And that means that the FedExes, that means that all of these big bellwethers that are in the Dow are given a totally different take about the earnings. Now, they are different sectors, and we talked about the commodity trade because QE3 was there and whatnot. And one of the things that the CEO said at Caterpillar was when he was in Washington, D.C. for 3 days, as he said that he didn't see, he didn't think that there would be a recession in the U.S. But it, the recession remains possible. Much of Europe already mirrored in recession. Company said that its 2015 goal hasn't changed, but the economy has. And the economy has, and that's what the CEO at Caterpillar's got to say. And he's right on top of this stuff. And we've already said all of this before he, has come out and made these statements. Caterpillar thinks something will happen to avoid the fiscal cliff. And he spent 3 days in Washington, D.C. there. So he's telling a different story, let me tell you. And that is a challenge because you can't have a bull side economy without the rails and the transports working, and I will update that. But here's some of the news. There's going to be a lot more news out of this sector. And the thing about it is, even with QE3, these things have got to get significantly still marked down. Caterpillar hasn't done much. It started out the year up here as a double top in 2012, but is yet to recover in this whole mess. A lot of it to do with Europe, and a lot of it to do with the Chinese and Australia, and lots of things where Caterpillar, they are the bellwether of worldwide economies. So they've taken their estimates down. There's some I agree with. I agree about the economic situation. I agree the fact that everything that we have told people is happening. And the thing about these big bull companies like Caterpillar, like Deere, like the rails, the big rails that ship our stuff around, and our trucking, they're all having a similar story. So even though that we have QE3, that's supposed to give a floor. However, it could take us a period of 2 or 3 quarters before this bellwether returns, and worldwide growth will have to return. So we're featuring the update on Caterpillar. There's a lot to this. If you want to find out more, send us an email, and we'll be happy to address anything that we can for you fundamentally around Caterpillar. And the info at stockmarketfunding.com. If you want to learn more about the weekly technicals and what Caterpillar and what the major backbone of Caterpillar worldwide, they know exactly where everything is. And the thing about it is, this sector is going to be challenging for several quarters to come. And there are great other stocks. Info at stockmarketfunding.com, double week reversal. All of these stocks that were the big bulls are now in bear territory with still weekly sell signals. And marking their earnings down is the only way that they're going to be able to come out of this. And there's going to be a whole lot more. There'll be a whole lot more in Caterpillar sector. that will have they're going to say the same thing. And the earnings environment, just because QE3 was done, doesn't change that we still have low growth. We do have low growth. And the thing about it is, we're going to deal with that starting October 8th when the earnings season starts. Bellwether, Caterpillar. The thing about it is, I would not buy Caterpillar up in here. I think that Caterpillar needs to come back down to where the story in 2011 was doom and gloom. That was right around $70 here. That's the 2011 bottom. Fundamentally, when we look at where that would be a good area to buy down here on top of that 200-week moving average. So Caterpillar has a distance to go over time. People are going to have to make adjustments in big portfolios. Remember, there was a survey that was done about mutual fund managers. Out of all of them, there was only one that was outperforming the S&P 500. And let me tell you, Caterpillar will be a buy sometime down the road and sometime after it reports its earnings. It's already given the guidance and taken it down. So when it does come down to key levels and things start to change, it'll be time to own it. Right now, we would tell people that we know directly that like buying Caterpillar is to stay on the sideline.